Hey, what's up everybody? Rob Gill, Epic Financial Strategies, and today we're going to talk about how to build wealth with life insurance. And we're going to share with you how to earn money while you spend it. I always get asked the question, hey Rob, how do you build wealth in life insurance? I thought the only time somebody gets paid is when you die. Well, that's one of the byproducts when you do shuffle off this mortal coil. I like to call it the mortal coil shuffle. When you do that, there is a death benefit that's left behind to the people that you love. But what is real interesting is if you're really engaged in proper planning and you really understand what your goals and objectives are in whatever business you want to do, and you begin to plan appropriately, what'll happen is as you're funding your cash value life insurance plan, which by the way, not only has a death benefit, and that death benefit will be tied to what your future value will be worth, even while you're building it today. But you also get the ability to have your money grow and come back tax-free, up to basis and beyond by borrowing internally. You'll also pick up litigation or lawsuit protection, not litigation, lawsuit protection, based on state law and based on contract. If you become disabled, it'll pay for itself, right? These are all the little MacGyver goodies that are tied to the policy. But what's real interesting is as your money is growing inside the policy and you begin to really take advantage of the opportunities that are part of your overall economic philosophy, and a lot of folks like to use real estate in this situation, as your cash value is growing, you will then be able to borrow internally while it's still earning a rate of return, go buy a piece of property, and in the space of buying that property, you'll be able to pick up 4 other rates of return. Typically, if you're a really good real estate investor, and that would be cash flow. Another beautiful thing would be able to kind of depreciate that asset on your tax return, which allows you to keep that cash flow right in that pocket over there, right? Because whatever your cash flow is, the depreciation is going to knock it down so you don't have to pay taxes on it. There's a mortgage interest write-off that's tied to the policy, so you get to write off the interest. And last but not least, not the policy, the piece of real estate, but last but not least, you bought the real estate today thinking in the future you'd like to sell it at a higher price. So that's a really good example of how your money's earning a rate of return while it's earning a rate of return inside your life insurance policy. And by the way, a lot of people that watch these YouTube videos, you may hear people talk about how you can get rich there's no such thing as overnight success. Let me just start there. If somebody says overnight success, do not let them in your house, they're gonna rob your jewelry. Let me be real clear. If you really build out a plan and the plan is designed for the long term, while you're building it out the right way, getting the right policy that is constructed in the way that sits and fits with your core values, what'll begin to happen as that money train is coming by, what'll begin to happen is you will then be able to create not only wealth expansion, but exponential growth, not so much on a product, but an overall process when it comes to your money and how to keep money and put it back into your pocket where it belongs. And by the way, folks, it's not just about real estate. It could be about anything. In times in the future, there could be a time where interest rates in our society go higher. Well, guess what? That means your savings account interest rates will go higher, which means what? If you're super duper conservative and you're not trusting the stock market at any time in the future because interest rates and all these other things are working against the performance of the market, what some folks do is they'll leverage off their life insurance and put the money into savings accounts. And they'll be able to get that double rate of return, once again, off that same dollar. And it's not about the product, it's about the overall process that you're engaged in that allows you to put this money strategically in place in and out of different assets. And by maneuvering that way, you get to stay ahead of taxes, inflation, lost opportunity, cost, fees. So listen, this is non-judgmental, by the way, because people out there buy a bunch of different type of insurance policies for different reasons. And the truth is they don't necessarily know how it could impact them today when they're just buying it for one purpose. And maybe you out there weren't explained in full of exactly what it looks like. What I can tell you here at Epic is that we have clients coming in all the time. They're overfunding their cash value life insurance plans, and they're beginning to take that overfunded piece and put that to work in other assets. Some use it to finance their own cars. Some use it to finance equipment. I have dentists out there that use it to finance their equipment instead of financing it through the bank. A lot of farmers, instead of using the bank for John Deere, they'll finance that equipment through their policy, but it can only happen if there's a proper sequence, proper understanding of your goals and objectives with the right team that knows how to put this together for you. And in the space of putting it together for you, where it's systematized, you have your own personal financial website where you can see things clear, click every single day at the click of a button, everything is updated. And in that space, your decision making is pure. And listen, if you really want to take some action steps with us, click the link below for the Epic Financial Freedom Map. It'll take you on a journey on how to go from here to here, but most importantly, when you want to go to the destination of your map, it'll tell you where you are today.